Rafe, who is, let me get your title right, Rafe, apologies, the Group CEO of MBSB, Rafe Hanef, and Stephanie Meyer from Global Head of Sustainability of FTSE Russell. We've heard about how we've got some sort of permanent divergence, which is a worry for us all, but this panel is going to dig into what actually happens when the rules stop being shared. And that's what we're going to explore today. I'm going to, instead of my preamble, I'm going to jump straight into questions, if you don't mind, so then I can get out to you for questions. So we're going to have shortish answers, because then we're going to come to questions in the audience, so get them ready. Before we do, I am very strict on you asking a question. It's really more of a comment. No, I need a question directed at one of our panellists. They've come a long way to speak to you, okay? So please get directly to your question. I know I sound like a school teacher. Sasha, you have been outspoken about some of the failures of ESG. Are we now seeing that the system fragments to the point where sustainable investing means completely different things in different markets?
Yes and no. It depends sort of on what vantage point you have, but I think it's all about it. I mean, people are debating names. Names are not really important. It doesn't matter. And what matters is that externalities are addressed in various ways depending on region, what actually matters. It was mentioned before, I mean, 700 million people do not have access to electricity today. 1.5 billion does not have access to financial services, and we are flying to the moon and have a SpaceX. So it depends actually what vantage point you have. So governance is becoming, I mean, governance being mentioned before as one of the rules, sort of how to bring that externality into the investment context, is viewed in a different way in different parts of the world. In Europe, it's much, I would say, rigid and stronger than it's in Asia or US, but it's very much depending on where you're coming from.
You say names don't matter, but is it possible that people are using names to avoid addressing those externalities?
It could be one of the things that is sort of, by doing that, you're sort of taking it out and not really letting it in. But I think the way how the market has developed over the last 10, 15 years, it is not a niche thing anymore, it's there. That's why we are facing resistance. That's why it hurts, because it's transforming the existing system, and system is responding back. It's fighting back. Does not want to have a medicine that we are subscribing to it. And I think what we are going to see going forward is that probably the use of the name, ESG, sustainable investments, whatever, maybe be something completely different. People, I mean, the companies who are taking the step back because of they're afraid of the repercussions from political side and so on. You know, between the closed doors, they are still doing the same thing. And they are, in many cases, increasing the activities to actually do it even better.
So, Ref, let's move on to an emerging market Islamic finance perspective. Was the global system ever really rules-based, or has it been selectively applied?
I think if you look at the ASEAN perspective, we have always tried to conform to the global standards. So if you look at Malaysia, Indonesia, Thailand, we have subscribed to the UN SDGs, banks have become members of UNFI, and we have GRI reporting standards. We comply with ISSB, TCFD, TNFD. Now, though there's been some fragmentation, ASEAN as a bloc is complying as much as possible to the global standards. We don't see any deviation from the commitments that the countries have given. So under the Paris Agreement, each of the ASEAN countries have given commitments to reduce by 2030, some 2050, and so on. What has changed in the last few months is because of the geopolitics. We have seen spike in energy prices, spike in many other petrochemical products. And now we are seeing supply shocks. So some of the commitments that have been given have been scaled back, not abundant. For example, in some ASEAN countries, there's been expansion in the coal usage. So in the past, most countries have scrapped any plans to build coal-fired power plants. But when the energy prices go up, right, people need to have energy security. So the governments are balancing between sustainability commitments versus national security, energy security, industrial policies, increase in living costs. So we are seeing some scale back.
And are you seeing any alternative models emerging?
So smaller countries like Malaysia have already advanced on renewable energy. So we now have about 1/3 of our energy consumptions coming from renewable energy. But large countries like Indonesia will take some time. So these geopolitical shocks really are the biggest concern that
But
we
what
have.
about alternative models to the ESG frameworks, to the ways in
Oh,
which we
right.
view
So
those?
we have ASEAN taxonomy, for example, which balances whatever the global sustainability standards versus the immediate demands of the developing markets. So there are very few nuances here and there, but overall it fits within the framework of sustainability. Like for example, we are quite big on green bonds and green sukuk, which complies with ICMA green standards, social sustainability standards. It's a growing market for us. The only point that I want to emphasize is, I run a bank, so we need to ensure that though money is not top of mind, but it's always at the back of the mind, because end of the day you are measured on a quarter-to-quarter basis, and investors look for total shareholder return, which is the dividend yield that you're going to give twice a year, and the movement in share price. When you see in America, where some of the companies which are not really sustainable, achieving 40 times PE ratios, Tesla is like 350 times more PE ratios. The question comes whether sustainability leads to higher valuation. Because you might give good dividend yield, but if the share price doesn't move, the TSR targets will not be achieved. So the stock will be penalized. So that's why we need to see whether those who are committed under the UNPRI, 17 trillion, are they giving value to companies who meet the sustainability standards?
Okay, I'm going to let Sasha come in quickly.
Just one comment. Look, the entire sustainability space since the beginning was all about changing the game or changing the rules. And what we have managed to do is to change certain kind of rules, but the game is the same. And this is exactly what the thing is. The game is the same. We still have to deliver financial returns, we still have to deliver growth, and we have to deliver it in a time span, in a time scale, in a time horizon that mainstream industry is doing without any constraints. And that is the same thing. So we either change the game or we change the rules. What Trump is doing in all this new thing is he's changing the rules and the game. And we are trying to understand where this is heading. And in sustainable finance and investments and all of this, we've been focusing too much on changing the rules, not really changing the game.
I want to come back to that, but I also want to bring in Stephanie. So Stephanie, indices shape trillions in capital allocation. How do you maintain credibility when ESG definitions are being pulled in different directions?
Thank you. So maybe taking a step back, what is an index? Actually, it is just a set of, well-governed, transparent rules for a list of companies. And so what we have there is then, the more traditional, very large kind of market cap weighted indices which drive the trillions. But one of the things we're seeing more of is actually asset owners, asset managers using indices not just to mirror markets, but actually to shape markets to drive capital in certain ways. So we now have 100 billion of assets using a kind of climate transition framework that uses a number of sort of inputs, including data from the Transition Pathway Initiative, which essentially, rewards and overweights those companies that are better prepared for the climate transition and underweights those that don't. That also takes into account things like which companies are, deriving more revenues from kind of green activities. So there is an opportunity to use indices which are scalable, are transparent, can send really, strong signals and start changing some of those incentives and the behaviours of the underlying constituents. Now, the scale of those indices is dwarfed by the scale of the market cap indices, but we have that as a really key tool, and the more we can use that as scale, we can use that as an amplifier and as that reward incentive mechanism, both through the index, but importantly also through sort of stewardship associated and alongside index-based investment. Then you start using that as a tool to shift the capital.
But do the diverging standards issues create kind of different truths?
I think it's about allocating capital, and different regions, different groups have different priorities and structures around which they want to shape the direction of that capital. We've talked a bit about, kind of ASEAN approaches and where the priorities are there. And, we have multiple taxonomies. Now, if certain asset owners want to allocate capital, more domestically or towards more energy efficiency, infrastructure, because that's a priority, then that can be used to do exactly that. So I suppose, I'm less concerned that there've always been different approaches to sustainable investment. What's important is there's a clear, mandate and rationale and transparency around what the intent of that capital is. And I think that's really one of the key issues, like what's the intentionality behind the investment, rather than this is where it's all gone and we'll follow that.
Oh, Sasha, I want to get to the audience. You're going to be quick. Sure. Go.
Yeah, look, this is also telling you how integrated this is becoming a mainstream. How many global equity strategies do we have in the world? How many? Thousands. UK equities are thousands. Do we question what exactly is definition? No, we don't. I mean, different approaches to sustainability is actually telling you how integrated this is. It's just another way of looking at the underlying investments you want to make, and you take in the debt lens. If I take my glasses off, I don't see you, and if I take them on, I have a ESG lens or sustainability lens. I mean, it's a very simple way of explaining it. It's not that complex. We don't have to bug ourselves down into definitions. That's what I want to say.
I feel like you read an article in which I had that exact analogy. Audience, it's your turn. So, brief questions, but good questions. You can direct them at a panel member if you'd like. Sasha has a microwave. Oh, look, I'm scared you all. Here we go. Fantastic. Down here.
Thank you. Very fascinating panel. I was actually fascinated by the title of the panel because I was working on something called the 7 Illusions of Global Power. And one of them is actually that markets are rational, and in reality they're not. The narrative is. So as we were talking now, I was just doing a very quick research. So the most valuable company in the world is Tesla at $1.3 trillion. And the second one is actually Toyota, about $200 billion. But if you switch it over, Toyota sells more cars than Tesla. Tesla's in the top 10. So it's one of the things that, how is Tesla...
We're coming to the question.
Yeah, the question is basically, it's more about the narrative, just like in marketing. Sometimes some products do much better just because of the narrative. So my question to the panel is basically, shouldn't we be focusing on changing the narrative and making the rules a lot more fair?
Excellent question. Stephanie, would you like to start?
Yeah, the narrative is important. But I think understanding is probably more important, because I think what we're seeing a lot of is a lot of narrative-driven activity without questioning the intent and whatever you're doing from an investment perspective is intended to achieve. And so there's been, reams of discussion around what we call ESG or sustainable, whether we've done ourselves a disservice by calling it one thing or another thing, etc. But ultimately, I think going back to what are you trying to achieve? What are you trying to allocate capital to? What are the kinds of activities, companies that are going to drive the outcomes? Yes, long-term financial outcomes, but also the real-world outcomes in terms of whether we do actually want to, address climate change and keep warming within a reasonable level that's not going to create the extreme impacts that we can see are going to happen from the physical climate change. So I'd say yes, narrative, but also education and understanding. And I think one of the things that sustainable investment has been good at is actually engaging individuals, because ultimately, big pots of pension fund money, there are money, there are pensions, there are investments, they're individual people's money. Understanding and connecting the role of investment, their role in investment, and helping them understand so they can make choices, so they're demanding the changes, is going to have, I think, a bigger long-term impact on actually how we direct capital.
So I'm looking to the audience for questions when they're coming, but would you like to answer that question? Were markets ever rational?
I think if you look at Tesla, they can fool some people most of the time, most people sometime, but not all the people all the time. Like what happened in the dot-com bubble, the AI bubble world burst. There's no way you can value at 350 to 400 times PE ratios. I think what's important is, I want to remind what Rumi said 1,000 years ago. Yesterday I was clever, I wanted to change the world. Today I'm wiser, I'm changing myself. So in the past, we have been trying to change the game and the rules, but we forgot to change the people who play the game. So that's why I think it's important to spend time on changing the mindset and the behavior of the humans. From those who believe in religion, there must be a clear understanding of the divine responsibility or stewardship. The Christianity really believes in this. It clearly talks about stewardship. Islam also, and you see Buddhism and Hinduism. And those who are agnostic must believe in natural obligations, the innate moral obligation to become the steward of the earth. Once we build that, then when market changes, right? Just because market is becoming more difficult for us to operate, it doesn't mean I'm going to do terrorist financing or right money laundering just because to budget. But why should we then sacrifice the environment just because we are short in terms of our performance? So I think the moral responsibility is really important.
Isn't it interesting that we've come back to the moral responsibility as per Baron Alder?
I think it was a great question. I think Mr. Musk is the best fairy tale guy in the world. SpaceX valuation does not have basically the underlying competence, I would say, to support what they have. Tesla is selling 1/3 of their revenues comes from carbon credits. Most of the people don't know that, and they're selling that to other companies who are producing, fossil fuel engines. I mean, this is very interesting. But what I think somebody mentioned that earlier, and I think what you said that we've been good at engaging people. I disagree a bit with that. I think we've been very bad in telling the stories and narratives that build trust and provide vision. We've been trying to fix technical things. And I think Baron, I don't remember who told that in this opening speech. We lost the fight for the soul and identity. Market economy, liberal market economy told us you can be whoever you want, you can achieve whatever you want, and it's all going to be on material things. We lost that soul, and the populists are filling the gap. And they're filling the gap with whatever they can fill it with, but we need to sort of go back to that. And I think the narrative thing, it's more important than ever before in where we're heading. Because we will not be able just to provide technical solutions, material things. We need to win the fight for the identity and the soul.
Question? Yes.
Hello, my name is Kaya Chuj. I work for the Accountability Accelerator, which is a project of the Rockefeller Philanthropy Advisors. I love the discussion here. It's fantastic. I think in terms of changing the game, and I like that positioning, and changing the rules and reshaping it, I feel that there's a very important role for governments. And there's no government representative on the panel, but obviously governments do shape the economy, and finance is one sector of it. And I kind of feel that there's been this myth that finance can solve the problems of the world. So the question here, I'm getting the questions.
Thank you.
Is what are the limits of how far finance can solve the crises that we're in? And how can we articulate that better and be more transparent about the roles that the finance sector can fill and the role of government in actually reshaping the rules?
Stephanie, would you like to go first?
Yeah, I mean, I think we're already seeing that, right? I think, post the sort of Net Zero Alliance and, seeing Glasgow, COP, there was a lot of focus on mobilising finance, and I think a lot of opportunities that then finance was able to see, in part because of the changing regulatory framework. A lot of the regulations or things like the Inflation Reduction Act in the US was actively incentivizing investment in some of these activities that support the sort of decarbonisation. I think in the recent years, absolutely a lot of focus from investors has actually been on, okay, how do we I mean, I'd be interested in your thoughts on how you change the actual game, but certainly on changing the rules, there has been a lot more focus on actually, systemic stewardship is actually about the framework and the regulatory environment that we have and the policy framework. I think maybe what we've seen is that also the policy framework isn't, despite the Paris Agreement kind of ratchet concept, isn't actually a ratchet concept because we've seen some of those things come back as well. So I think it is definitely a kind of finance, yes, and regulation, yes, and individuals as voters, individuals as investors. I do think that personal responsibility and understanding needs to come into play. But I think we're already seeing certainly a recognition of that. And now the question is, given what we were talking about before around, sort of pluralist world and alliances changing, how do you get that to happen?
Fantastic question. I mean, look, European Union has changed transparency rules. They do not change underlying business models. Unsustainable business reports in a sustainable way, and then we rank them on how good they are on transparency. I mean, come on, that's a joke. So fiduciary duty is really the key thing here, and it has been debated over years in UK, European Union, in the US, and so on. And the verdict is still out. What is the fiduciary duty, and how do we regulate companies at the core, how they manage their business? What's the role and responsibility of the board? Are these people really responsible for the decisions they make? And the verdict is still out. We're still not there. So I would say politicians are sort of almost trying to avoid looking at the real rules. And the game is still on the same. The game is still the same. The quarterly capitalism is still here, and the growth is still here, and we still have to deliver on the premises that we have on the market. Financial markets will change when the rules change, for real. But the rules are not changing for real. They are just marginally changes in transparency level. Transparency of unsustainable economic model is not changing the underlying economy. And this is one of the biggest challenges we have. And when we talk about finance, when you look at the finance, what can finance do? We can do a lot of things, but give us the level playing field that we understand and we can approach from sort of a fiduciary point of view, and then we can act on it. And I'm not saying this as an excuse. This is one of the reasons why many managers are just taking a step back, saying, I don't know what the rules of the engagements are. I mean, our fiduciary duty is not clear, so why should I do that?
I'm going to look for questions. Raf, would you like to answer though? I think that'd be an interesting answer from your perspective, from the Asian region.
Influence this financial system has, I think, is enormous. When we were restricting our financing towards coal or mining companies or those who are involved in forestry, they literally had to shut down. Even if they can operate without financing, when they export, they still need a documentary credit facility. They need to clear through the banking system. So if the banks put a check on them, literally they have to trade in cash or Bitcoin. Even Bitcoin is probably also difficult. So I think financial sector has an important role to play and can significantly constrain all these things if the rules change and we have people who are genuinely keen to play this stewardship role.
I want to fit in one more question. Tom, it's got to be quick. Sorry, Tom already had a microphone.
Make it quickly.
Yeah.
I was going to...
Microphone?
Microphone? Hello.
Try again, Jack. No.
No. I haven't got the microphone.
Okay.
I was just going to ask, if the ultimate measure of success is making a truckload of money, it's not about the rules of the game, it's not about anything else, it's just about, I want to make a truckload of money. That it's quite hard to change any of the other behaviours if ultimately everybody snaps back to that.
That's a great final question to end on. What if that's the ultimate aim of most people?
So while the key focus for banks is the total shareholder returns, the positive sign is our shareholders. For example, we are owned by a pension fund. They're one of the top 10 pension funds in the world. So they give us a KPI that 10% of your KPI is linked to sustainability requirements, and that they actively monitor every quarter. So that's the hope that we have, that it will continue. Even I'm not there. Someone who comes in with less commitment to sustainability, the shareholders are there. So I think this is a good sign that this growth will happen.
Sasha? Stephanie?
I was going to say, I think, and maybe I'm obliged to end on a more positive note, I think there's more views around how you deliver that return. And I think that's the key. You know, there's more than one way to deliver a long-term return, and actually there's a lot more consideration and actually tools out there to be able to do that in a way that hasn't been as extractive as it has been previously. Now, will we collectively at sufficient scale rise to that challenge is the big question.
I completely agree. It's about how. It's not about what. It's about how do you do that. I think that's the sort of a very difficult question as well.
Well, I'll leave everyone on this note because I'm not sure I agree that it's about how, because my fear is that we're in a bubble here. And in this room is the bubble where we're all about how and we're all about that. But actually is out in the real world, Tom's question, that, you know, actually people are really just pushing for it. And that's why the SpaceX thing has happened. But as to Stephanie's point, we all doubt that SpaceX is a long-term play, or at least maybe we're asked questions about that. So is the long-term focus much more important, and we, people like us, hold the line. I want you to join with me in thanking the panel.